Welcome to the Explainer. Okay, so the 2026 union budget is right around the corner, and you can feel the tension, right? Every investor is on high alert. So today, we're going to break down exactly what's at stake, and more importantly, what it could all mean for your portfolio.
All right, let's just jump right in with a number that really tells the story here. 55%. That is how much the India VIX, the market's fear index, has skyrocketed this month alone. The market is on edge, and you can practically feel that volatility in the air.
So all this nervousness, it really brings us to the big question, the one every investor is asking right now. Why? What is it about this budget in particular that has everyone so on edge?
Okay, so here's how we're going to break it all down. First, we'll dig into why the market is so anxious. Then, we'll do a quick health check on the economy. From there, we'll zoom in on 4 sectors that are really in the spotlight. We'll also look at what investors are hoping for versus, what's realistic. And finally, we'll talk about navigating the big risks on the horizon.
All right, Section 1. Let's start with the basics. Why is the budget such a massive deal for the market? I mean, its power to move the needle, it's immediate, and it could be incredibly dramatic.
And look, you only have to glance at history to see that Budget Day is a total roller coaster. Take 2020, some disappointing tax news, and boom, the Nifty tumbles. But then, just 1 year later, a big focus on infrastructure sends it soaring almost 5%. And then again in 2024, an unexpected tax hike pushed the market right back into the red. So yeah, predictable is not a word you'd use here.
And hey, it's not just about stocks. The ripple effect is huge. Just look at this example from July 2024. The government cuts the gold import duty, and almost instantly, the price of gold drops 5%. Just like that. It's a perfect example of the raw power the budget has over pretty much any asset you can think of.
Okay, let's pull back for a second and look at the bigger economic picture. Think of this as the backdrop for all the budget drama that's about to play out. So here's a major source of that anxiety we've been talking about, how the Indian market has been stacking up. I mean, in 2025, you had global markets like the NASDAQ in the US and the Nikkei in Japan just on fire, right? Huge rallies. Meanwhile, India's Nifty, well, it kind of lagged behind, with a return of just over 8%. That's a big difference.
So the natural question is, what's been holding India back? Well, one of the biggest culprits has been this relentless selling from foreign institutional investors, the FIIs. We're talking about those massive overseas funds whose buying and selling can really move the market.
And when I say relentless, I mean it. The sheer scale of this sell-off is just staggering. Get this, in 2025 alone, FIIs pulled out more than 14.4 trillion rupees from Indian stocks. Why? Well, they're chasing those bigger returns we just talked about in places like the US and Japan. And when that much money flows out, it puts a ton of pressure on our entire market.
Now, at the same time, the picture here at home is, well, it's a bit of a mixed bag. On the one hand, you've got strong GDP growth at 8%, which is fantastic news, right? But on the other hand, the government is basically walking a tightrope. It's trying to shrink the fiscal deficit, but it's also got to deal with these external threats, like potential trade tariffs from the US. It's a tricky balancing act.
Okay, so that's the big picture. Now let's get to the really interesting part, the specific sectors that all the analysts are watching like hawks heading into this budget.
All right, first on the list, railways. The government is expected to pump even more money into capital expenditure, maybe another 5 to 6%. And the big focus? Expanding those modern train fleets, like the Vande Bharat. This could spell some serious opportunity for the companies right at the heart of that expansion.
Next up, we've got defense. This one is all about the government's major push for self-reliance, the Atmanirbhar Bharat initiative, and it's already paying off. Production has already hit 1.5 trillion rupees. The message from the top couldn't be clearer. Build it here, in India.
But what's really fascinating here is the sheer ambition. This isn't just about making things for ourselves anymore. No, this is about becoming a major global player in defense. I mean, a 5,000 crore rupee export target by 2029, that signals a massive long-term commitment to this sector.
Okay, our third hot sector is renewable energy, and you can see why. India has this incredibly aggressive target, 500 gigawatts of non-fossil fuel capacity by 2030. So how do we get there? Well, you can bet the budget is going to have some serious incentives for things like solar, green hydrogen, and battery systems. And last but not least, let's talk about the auto sector, especially electric vehicles, or EVs.
Look, urban demand has been slowing down, and a big government push to build out EV infrastructure. We're talking charging stations everywhere. That could be exactly the jolt the industry needs to kick back into high gear.
So, we've talked sectors, but now let's get to the one topic that is on absolutely every investor's mind, the one thing on everyone's wish list, and that, of course, is taxes.
And this right here, this slide sums up the central conflict perfectly. On one side, you've got investors who are just desperately hoping for some relief, a cut to capital gains tax, lower transaction taxes, you name it. But then you have the reality check from analysts, and their consensus is pretty clear. With so many spending programs to fund and a deficit to control, the government probably just doesn't have the room to make tax cuts happen.
Okay, so we've got a nervous market, we've got economic pressures, we've got some interesting sector plays. So, with all that in mind, what's the game plan? Let's talk strategy and the big risks you need to be aware of.
Now, it's really important to remember that some of the biggest threats are completely outside of the budget's control. There are three big ones to watch. First, if that AI bubble in the US finally pops, it could trigger a global downturn. Second, if the India-US trade deal gets delayed or fails, our manufacturing sector could take a real hit. And third, if those FIIs keep selling, that's just going to keep putting pressure on the rupee and the market as a whole.
So, what do you do with all this information? What's the strategic takeaway? Well, the general thinking is to focus on a few key things. 1, think about sectors more than just individual stocks. ETFs can be a great way to get that broader exposure. 2, maybe prioritize the big, large-cap companies. Their stronger balance sheets usually offer more stability in shaky times. And finally, keep a really close eye on consumer spending. At the end of the day, relief for the middle class is what's really going to fuel the whole economy.
Which, of course, leaves us with the million-dollar question. Or maybe the billion-dollar question. As we head into budget day, is this thing going to be the fuel for a brand new market rally? Or is all this turbulence we're feeling right now just the beginning? Well, only time will tell what our leaders decide.